Very excited to be in studio with my friend Sebastian. Bea.
Something really big may have just changed. A lot of folks have been waiting for Bitcoin to act a bit like digital gold, and we may have just seen that.
Since the whole tariff tantrum that we've been snarled in.
Sometimes the ideas are so big that people either can't hear them or don't want to hear them, but they got to listen to this one.
Although I get the free lollipops at the Chase, which is fun.
Bitcoin has been separated from the rest of crypto and has been made unique.
I think that's a really good point.
Thank you, Frank.
Ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chaparro. Very excited to be in studio with my friend Sebastian Bea, president of Coinbase Asset Management. We've had so many execs from the firm join the program from across divisions, but we've never spotlighted the asset management side of the house. So we can definitely get into that. We were supposed to record in San Francisco when I was there a few weeks ago, but I think this is way better timing just given everything that's happening in the market. Like we didn't have the decoupling earlier this month.
Yeah, we like to say in markets, the time isn't linear. And what has happened in the last couple weeks, it's like a year or even 5 years in terms of how investors may come to think of Bitcoin and digital assets, right?
Well, what's the old expression, right? There are years where days happen and days where years happen.
I think there's a Star Trek movie where they said, when Spock said, when minutes are like seconds and seconds are like hours or something like that, speaking in code. I'm not so sure, but I can tell you with certainty that we'll probably look back on the last couple of weeks and recognize that maybe something big just changed, right? Something really big may have just changed. A lot of folks have been waiting for Bitcoin to act a bit like digital gold, and we may have just seen that. If you look back on April 4th, when the S&P was down 5% and Bitcoin was up 1%, and even more recently, where you've really ended up with a big performance divergence, right? We were just looking at numbers recently. NASDAQ is down 9 or 10%. You probably would have expected Bitcoin to be down 20, and it's down 4 on the same time frame. That's massive outperformance versus expectations on a vol adjusted basis, adjusting for how volatile Bitcoin has been. These sort of things are anecdotal today, but when they happen, they get the attention of big macro funds. When they happen, they get the attention of big asset owners, sovereign wealth funds, central banks, because Bitcoin is not a small asset like it was at some point. Now it's a $1.8 trillion asset that doesn't close. And for it to act like it has done more recently, it's a big deal. Yeah. So I'm glad we're doing this today and not back in San Francisco when things were a little more quiet.
But even then, I mean, if you looked at the performance of Bitcoin, you would have probably expected it not to be there for most of, since the whole tariff tantrum that we've been snarled in for the past, month and a bit, 2 months, maybe at this point. Bitcoin was basically down the exact same amount as S&P, which is extremely bullish Bitcoin. And now you have a situation where it's outperforming the S&P. And instead of basically being like a NASDAQ beta, it's more akin to gold. What was behind that shift, do you think?
Well, there's been a market event already in crypto, which we'll get to. There's also been some significant structural change, right? That's happening away from markets, but is in the infrastructure of asset management and asset allocation. It's a little harder for most of your viewers to see. But let's talk about the market side first. Look, we already had a bear market in crypto, and that preceded the tariff tantrum, or the market fall off that we saw. To some degree, you could argue that the prior administration, and not the administration rather, but the prior SEC, was more likely to go after your project the more useful it was, right? So we had a bifurcated market where stuff like Bitcoin was seeing a lot of activity, and then you had meme coins, and then of course Solana, where a lot of activity was happening, right? That kind of was the shape of the bull market coming into the election. But as we shift now to this new administration and new SEC, it's clear from various public statements that this SEC wants functionality, wants utility, wants safety, of course, for as investors. Um, and so, but that shift in regime probably brought a bit of a bear market that we already had in crypto before all of the concerns around tariffs. So you could say, well, wait a second, crypto already sold off before this whole tariff thing happened. We already had our kind of our pullback, right? So we were already arguably in a better place from a, let's call it a positioning perspective, from the leverage that was no longer present in our market, right? So for those that are yeah, if you look at like funding rates, in offshore exchanges, those things were had been quite positive going back to last year, but they flipped. Aside from Bitcoin, and many of them actually flipped negative for multiple days, right? And that's pretty anomalous. You don't see that, right? So we had that going into the tariffs already. But the bigger thing that we think is happening is this concept that Bitcoin is being considered very seriously by large asset owners and asset managers all around the world as a potential new store of value, right? We are seeing a trend. It's still picking up where investors are asking for a capital market assumption for Bitcoin. Now, what the heck is that,
Yeah.
right? Well, that is something that is required for an institutional investor to actually take Bitcoin, as an example, and put it into their investor policy statement as a permanent asset to say, okay, I have equities, I have bonds, I have private equity, I have private credit, I've got venture capital, I've got all these things, right? And I have return assumptions for all of them. And I also have correlation assumptions for all of them. And then they, with their consultant, basically decide, well, what's our allocation going to be based on the returns and the correlation and our goals and constraints, right? And that's when you get this allocation to all of these various buckets. Now, in that conversation, Bitcoin has not been there, right? Because there's no major asset manager, JP Morgan, BlackRock, et cetera, that has had a capital markets assumption for Bitcoin, right? We've been asked, and we're in the process of making one, where our CIO Marcel Kasumovich is formulating the long-term return assumption for Bitcoin, right?
And it is through those, through creating a framework like that, that institutional investors can kind of think about Bitcoin as it pertains to portfolio construction. Because
Exactly.
without that framework, you don't know what it's sort of replacing, what it's sort of correlated to, and how much of an allocation you should make.
Right. And going back to the market movement we just had, there are two key parts in a capital markets assumption. One is return. Another one actually is correlation. So when we look at what just has occurred in markets here, right, in the midst of this tariff tantrum that the markets have had, we don't know for sure, but it is starting to be the case that Bitcoin is starting to act more like gold, right? And assets get bigger allocations when they check two boxes, right? That they can generate a return and they can be additive to the rest of the portfolio by being non-correlated or negatively correlated. And so observations like we've just seen in like April 4th and then more recently, that starts to make the case structurally to say, hey, look, over the long term, we should just have some, right? And some will be determined by the math in the end. But yeah, it's a very big deal what we've seen more recently, and this process is slow, right? But it's now finally starting to happen. We've spoken to multiple large investors who are considering adding Bitcoin and or just digital assets in general to their investor policy statement, and that is the thing that has to happen for them to actually directly allocate.
So it's interesting because it allows a lot of these investors to not just invest in Bitcoin over the long term if they think that it's something that's going to appreciate or they buy into the story or the technology, but now they have not an excuse, but a reason to allocate in the short term as almost a tool or vehicle to hedge against short term market dynamics and changes.
Possibly. When investors are thinking about, this structural conversation about how you make your pension plan, right, or your overall sovereign wealth fund, these are long conversations that have already been going on for some time. But observations like we've just seen can accelerate action, right? where you say,
And then it becomes like a self-fulfilling prophecy.
to some degree, yeah. So I think it's a really, really unique time for the crypto industry, for us, for because we're starting to see different asset behavior, which is a very big positive. And at the same time, you're seeing all the legal and regulatory momentum for the asset class. It's hard not to be pretty bullish, right? Given everything we've been living through, especially through the last 2 years, to be in this environment, and to see what is a high beta, turbocharged NASDAQ
Mhm.
not be that in that moment, that's a big deal.
So let's walk through some of the crypto specific catalysts behind this shift and maybe some of the external catalysts that are playing a role in Bitcoin moving from being a NASDAQ beta to more of a digital gold in a way. You obviously have, I think something that's super important is the fact that there's not as much leverage baked into the system as there was a few years ago. So we're at these prices without, a $20 billion loan book at Genesis. We're at these prices without sort of the recycling of capital that we saw vis-a-vis Three Arrows and the like. We also have on the macro side the debt picture, which we were talking about before we started recording. Some other factors, obviously the regulatory clarity that is sort of the door is open to that, but we haven't necessarily gone into the room and started furnishing the apartment, as it were, to use a random analogy. So regulation, a more sort of stable leverage environment, I would say. Maybe you disagree. And then this macro environment of sort of the mounting escalating debt and how the government might seek to address that vis-a-vis, kind of rebalancing their assets and liabilities.
Well, we should get into what we think will be possibly one of the biggest catalysts for Bitcoin between now and the end of next year, because I think the government story around the revaluation of gold is a big deal. But just backing up, I was in the Middle East again. Look, international investors are concerned about the dollar, right? And in that context, Bitcoin and digital assets are something that have potentially a big role to play, right? And I think that the pre-existing high level of debt that was known. Everyone has the same concern, right? But now there is a little bit more concern around the volatility that's being created with the trade policy. We'll see. It's a negotiation.
Mhm.
My sense is everyone always overreacts, and that we probably saw a very big overreaction in markets. Um,
Which
and
is kind of fair because
yeah,
these things can get out of hand very quickly, and there's really no limit to how bad they can get. So the market gets spooked
right.
by
So the
that.
market has gotten spooked, and we've seen that behavior of the 10-year Treasury. But when you look at crypto assets and Bitcoin in particular, it just seems so obvious now to some large investors. They say, "Well, wait a second. You've got the regulatory behind the asset class, right? You've got low levels of leverage in the system today, right? So that, from a trading perspective, makes it seem like a good entry point." Um, and I mean, look, you have almost everyone on the outside looking in, right? I mean, that is still the case in the institutional space. There's pockets where you're starting to see real growth. And look, we are seeing the advent of publicly traded companies adding Bitcoin to their reserves. You're seeing now, there was yesterday news from Cantor with Jack Mallers about 21 Capital. So you're starting to see more permanent capital vehicles starting to acquire Bitcoin. I mean, these are big new things, and it is creating a bullish picture for the asset class. When you ask investors, well, what's it worth, right? It really is a probabilistic framework. They know what it could go to on the downside, 100%.
Yeah.
But at least some people believe that. I don't believe that anymore. But the argument about how high it could go is really one of these multiple conversations, right? So it's pretty unique situation where you have an asset that's $1.8 trillion, dollars, give or take, that has so much upside relative to its downside in most investors' minds, and yet they're not exposed, right? It's a really unique time.
So walk us through kind of like the timeline for a lot of these allocators in terms of wrapping their head around where it fits in the portfolio, thinking through, the benchmarks that they would sort of, um, kind of expect Bitcoin to perform or underperform or outperform, and then just sort of like accessing the market, right? Because there's many different vehicles through which they can get that exposure, whether it's ETF, some of these new access vehicles that are launching um, through these publicly traded companies. And then, of course, there's spot. They can go to Coinbase and through the prime brokerage offering. So you have to sort of think about where it fits in the portfolio and how it fits. And then how do you then make that allocation? And how long does that all take, right?
Well, if we're talking about an end, sovereign wealth fund or a pension fund, and we have conversations going with many of these, um, the fastest any of these entities can move is generally 2 quarters, right? Um, there's all these processes that exist. So generally speaking, if you're going to do something, you have to propose to do it, right? And that has to be approved generally by the investment committee. Most large plans have an investment committee every quarter, right? So there you go. And if you're going to propose to do something, oftentimes you're going to propose that you want to do something, and then you have to propose to then, to your point, think about execution, which there is really a search. So you have to propose the allocation, you get approved for it, and then you got to go search for the manager or the fund or the direct access platform, right? So best case scenario for somebody, and we know a couple of these plans, the best case scenario is literally 2 quarters in most cases. So we wrote a piece a couple of years ago saying, where are all the institutions? Well, they're now here,
Mhm.
but not everywhere. And even those that want to move, it's going to take some time. I think we're going to see, we're going to come back from summer vacation. And I think in
After
September,
I get back from Saint Sebastian.
San Sebastian, and then you're working in Italy, I think.
Yeah,
Yeah,
yeah.
yeah,
No, I
work.
will work. Yeah,
Yes,
do
yes.
some work.
But I think we're going to see some big headlines in Q3, which will wake up the market and say, okay, well, it's not for everybody, but for this subset of investors, maybe it should be in your benchmark, right? And that sort of endorsement value we haven't actually really seen, right? Um, even if you look at some of the actions of U.S. state plans, most of what's been announced has either been very small, or if it was big, it was actually just a basis trade that was embedded in an existing pension plan's hedge fund book, where they were long ETFs. That was true. It was reported, but what you can't see is they were also short futures, and they were just trying to generate a fixed income like return,
So
right?
that's a really interesting point, and it makes me think about one stat that I've tracked since Coinbase went public. And I don't know if they started reporting this as soon as they IPO'd or if it was, more recent. But most quarters they'll say like, oh, they'll give a sense of hedge fund penetration. And so, maybe a year and a half ago it was 10% of the world's largest hedge funds had been onboarded onto the Coinbase platform. And then I think the most recent earnings, and I could be wrong, so don't quote me on this, audience, was like 33% of the world's largest hedge funds had been onboarded, which obviously each of those are going to be in different periods of that life cycle from, because onboarding can just mean that you're, did some paperwork and not necessarily began executing trades. Um, Maybe walk us through that hedge fund penetration and then other sort of segments of the institutional landscape, because then on the other end of that, there's the banks, which had the regulatory impediment, but also these collateral, questions that are outstanding.
Hmm. Well, you're right. We have seen penetration and, let's say, adoption in hedge funds, asset managers, and in the banks. Um, Clearly, the hedge funds are most advanced, right? Their underlying clients are willing to take more risk, and I don't mean risk from a like legal or compliance, but more like this is a highly volatile asset with still a different way by which you own it, right? So there's higher operating risks that come with it, right? So the hedge funds come first. That makes sense, right? Asset managers are doing other things, fine. The banks were blocked by SAB 121. SAB 122 undid SAB 121, right? Which is somewhat poetic, but in any case, um, so where are we? I mean, the banks are still not there, and things are coming fast. I mean, in public, you've seen Bank of New York, Mellon. really starting to accelerate their activities. That's really great, but it's still early days, right? And that's just for crypto. Now, what is one of the impediments to adoption, even today? It's legal clarity as to the assets, right? We know based on the approval of the Bitcoin ETF and the ETH ETF, we know that they therefore are commodities, right? But we need to see more assets get viewed as one or the other, right? And that is really down to legislation. So there's a revamped version of Fit 21 that's making its way through the Hill, right? And for much bigger adoption, where we can go down the list, right? You really need to know: is this a security? Is this a commodity? Right? And it has bigger impact. It has a significant impact. Also, it's a little esoteric, but if you're a U.S. investment manager and you don't know if something is a security or a commodity, there's actually still a looming risk that it might be neither. And the IRS shows up one day and says, "Oh, your international investors now owe us a 45% tax on their gains because this is effectively connected income." Now, most of you probably never heard what that is. ECI are three letters you never want to hear in in your portfolio conversation. But it is the idea that we have in the United States is we want to have fair competition in markets, right? And ECI was established in part to protect U.S. financial companies from international financial companies with different tax environments. ECI puts them on the same footing, which is great, but it has had an unintended impact for U.S. Investors in crypto. Because if I have a U.S. fund, or rather, let's say I have a Cayman fund, but I'm running it from the U.S., and I trade anything outside of products with if I trade products that do not have a CFTC listed future, right? It could be the case that the IRS would show up one day and say, "Yeah, that is U.S. trade or business, and your international investors owe the IRS 45% of their gains." That has been hanging over the industry, and that has caused many investors in crypto to actually be offshore. Because if you're trading in those crypto assets offshore for international investors, IRS has no claim on that business. So that's been another one of these things that it's hard for people to see, but we really need Fit 21 or some version thereof to come through and then give a clear delineation as to whether it's a commodity or security or something else. But in either case, there's a big tax impact, or rather tax overhang that would be removed. So we're excited that that might come down the road, but that's also another thing that has not yet happened.
Okay, so here's an interesting question. Like, once you have that designation, like let's say, these are for let's say the lion's share of the assets that like a Coinbase or a Gemini or a Kraken trade. Let's say for the sake of argument, 100% are commodities. That's going to maybe change the actual way in which these marketplaces function, right? I mean, I would imagine or if let's say they were all securities in some form, you're gonna like Coinbase is gonna have to do certain things differently in terms of, I don't know, reporting, tax to your point, or even like coming up with something like, best execution parameters and things like that. Is that a
You're absolutely right to focus on the designation of the assets and the way in which the assets move, right? So money and commodities can basically move not completely freely, but pretty freely, right? Whereas securities don't, right? Securities have to move within a certain framework, and there's all its sorts of rules and regulations you have to adhere to in a securities framework. There are also rules and regulations you have to adhere to in commodities, but they are different, right? And so, for example, you can't take one of your Apple shares and go hand it over to your local barista to buy your coffee, right? But you can with USDC pay for it, right? And so if you think about how money moves, how crypto moves, right? It's able to be programmed and sent,
Mhm.
basically permissionless, and that works well. The problem is if you were to so once you stick it into the existing securities framework, that's where it doesn't really work that well, right? It would create it doesn't make sense, right? And I'm not speaking for Coinbase here, but it's clear that these things are different and they are not securities in the way that we created securities laws, right? And their functionality depends on
90 years ago.
on their free movement in many ways. So we really need to get to clarity. But once you have clarity, then that's when the big money can do lots of things, right? That they can't really do until we really know, right? Obviously, the perceived risk of engaging with these assets has gone down with the new administration, and that's great. But to go and build businesses on these networks, right? To decide that you want to use, a decentralized storage platform instead of AWS, right? You really would need to have legal clarity as to what is this thing that I am now using as a better alternative, in my view, right? You need to have clarity as to what that thing is. And up and until that, you really are going to have much less utilization. And I think that's why when you look at all of the amazing networks that have been built, right, with all that functionality, you really don't see many networks that are profitable today, right? Because we don't really have the laws and the regulation to enable the world to move on chain as we would like.
One thing that I'm curious about is how this shift, sort of in thinking about Bitcoin, as a kind of like a juicer of NASDAQ to more akin to gold, how is that manifested into your day-to-day sort of workflows? I mean, is there more interest? Is this allowing you to, is how's business as a result of that, I
Well, things
guess?
are definitely picking up in general for the industry, and we're still a small business, but we're definitely seeing some growth, which is nice. The I would say that the certainty that's been applied to Bitcoin has actually driven attention much more to Bitcoin in the short term. When we were first engaging with this asset class 3 years ago, we kind of came at it, at least I did, from an equity perspective, right? Um, and to think, well, you're going to want to have an index, you're going to want to do all these different things. And that was maybe the right perspective, but for the wrong time,
Sure.
right? What we've seen now is you have a Bitcoin strategic reserve for the United States, right? And a digital asset stockpile. Bitcoin has been separated from the rest of crypto and has been made unique by this government in the US and by others, right? And that is impacting how investors all around the world are considering Bitcoin. It may partially be responsible for the different behavior we were talking about in markets more recently. Because when the US government says, we own Bitcoin,
We're not gonna
we're
sell it.
not going to sell it, right? And we're going to look probably for ways to buy it over time in a budget neutral way. Well, that's just a huge change. And they're not saying that about the digital asset stockpile. That we'll see what happens with those assets. And it could be, they can always change their mind. They can do different things, but they have set a course on Bitcoin that's pretty unique. Or not unique. I think
And walk us through
it's a
the
big
logic,
deal.
like, you sort of have a thesis around the
Well,
logic of why they're doing or
so
how they're gonna do this and why
So
they're gonna do this.
yeah, so I think I'll have to quote my CIO Marcel Kasumovich, who's
He
based in.
got 2 shout outs on this show,
I
which is
know.
great for
Well,
Marcel.
he deserves more. He's a brilliant man, and he has incredible experience having worked at some of the biggest macro hedge funds in the world, including working for Soros through the GFC, where they did very well. And Marcel was he's too modest to admit, but he was definitely a big part of it. So he's got big ideas every now and again, and I think sometimes the ideas are so big that people either can't hear them or don't want to hear them, but they got to listen to this one. Okay. So what has the government told you? The US government, they have said that they would like to progress on a path of asset monetization in general. Now, what are the assets in that monetization plan? Gold, Fannie and Freddie, the US buildings that we're not using enough of, right? Okay. So Fannie and Freddie and the buildings are pretty easy. Float them, sell them, right? That's going to generate more. That's going to generate some capital, right? And maybe some gains depending on where they're marked, which is going to accrue to the U.S. government and perhaps go over to the sovereign wealth fund. Maybe it's already in the sovereign wealth fund. That's neither here nor there. It's just they have these assets. They're going to monetize them one way or the other. But gold is different, we think. And to quote Marcel, his view on gold is that you really have to understand the pipes of central of how banks and how the government works to understand why, or rather, how they might revalue gold and buy Bitcoin and yet be budget neutral. So let me walk you through it very quickly. So today, because of law, the U.S. government still values gold that it holds in Fort Knox at $42 and change. Right now, if they were to just mark that to market, so it's worth probably an incremental 900 billion to $1 trillion. Right now, if you look in the public press on Twitter, most people suspect that it will revalue it and then sell some gold to maybe go buy some Bitcoin. We don't think that that's the most likely case. We believe it's most likely that at some point, it could be this year, they will go and change it such that they will revalue gold to current market pricing. That would create a mark-to-market gain of $900 billion, right? And if you look at, I think the Senator Lummis bill was calling for buying, I think it's 1 million Bitcoin over 5 years. Well, that's $100 billion, if I have the math right. So our back of the envelope is that when the revaluation occurs, that creates a $900 billion, given today's market price, mark-to-market gain, which then is money that the Treasury could then take. And then the Treasury would be able to use that money in the sovereign wealth fund in a budget neutral manner to go and buy a variety of things, we think probably including Bitcoin. And just to think about the math, $100 billion of 900 billion doesn't sound like that much. But the asset is about a $1.8 trillion asset. And if we go from no longer selling, right, which we just did, to here's a way by which we can actually take on a meaningful position, it's hard to see a situation where other governments don't feel compelled in some way to measure up,
And
right?
then you have this arms race, as it were.
I don't know if it's an arms race, but it's definitely a competitive situation, as it is already today with gold, right? What we have, I think, the largest stockpile of gold, based on public data, and it's very well known that central banks around the world have been buying gold, right? Probably because of the overall level of debt that they see and the concerns around the global economy. But you've seen, big participation from institutional investors, the most institutional, right? Central banks, they're not investing in Bitcoin, in gold, they're saving
Yeah.
in gold, right? They're saving in gold. That's what they would say. So does it seem so crazy to maybe save in some Bitcoin at like say a 90-to-10 ratio, given the whole world is going online and going on chain? Probably not, right? So we think it's hard to get the timing right. Um, but we would tell people to carefully watch what the government does around gold, and if and when they do actually revalue it, it's going to be. We think it could be a big moment for the industry.
Now, you guys think this. Do some of your clients, are they positioning for this reality?
No, um,
This
we were
is a nascent sort of.
most most investors have a hard time engaging with something that, well, look, it's hard because you say it's the U.S. government, and counting on the U.S. government to do anything over any period of time is difficult, right? It's not, there is the case now that we're seeing more activity and actually getting laws passed, which is great, right? We want DC to do its job. But if you think about the last 10 to 12 years, it's been hard to get legislation through Congress, right? It's been hard to get action done. Part of like the whole Chevron debacle, the whole Chevron lawsuit, which you might know about, was I mean, you could argue that the regulatory bodies were pushed to go and do things because we couldn't pass laws, right?
Sure.
So when you talk about this big potential change, it's nice, but it's hard for people to really engage in it because they think, well, wait, I'm not going to make an investment based on what any singular government might do, right? But this government is pretty clear, and I would also say, like everyone is concerned about the asset liability position of all of these developed economies, and if we move a little bit quicker than others, then it's probably better for us, right? So I think over time we will see more investors take heed of this. And we'll see. I mean, it's one reason. It's just one. It's one idea, but it could be a big one
Yeah, it's just part of the whole concoction, the whole stew of bullish catalysts that exists for crypto or for Bitcoin specifically right now.
for Bitcoin specifically. Yeah, yeah.
Yeah, because the long tail, like that's sort of we're almost bifurcating, right? Because that longer tail is going to sit in the old position that Bitcoin sat in, which is really just a equity juicer.
Well, it's funny. I was talking to on the other side of Coinbase is you might know him, Anthony Bazilli. He heads asset managers and tokenization for Coinbase Institutional, and he thinks that we're gonna leave that we're gonna leave this concept of Bitcoin dominance behind because Bitcoin is almost graduated into TradFi
Yeah,
as an asset, right? That the idea of talking about Bitcoin's dominance in crypto, it's going to be more about, well, what is gold's dominance to Bitcoin, right? Like what is the ratio of gold to Bitcoin in terms of market cap? Um, and I think that that's a good idea.
they almost have Bitcoin and the other assets almost have nothing to do with each other at this point in the market.
Well, I think it's a great point. In general, digital assets are such a broad church they don't make sense,
Yeah,
right? Like if you look at like stocks and bonds, right? They all still come from companies with income statement, cash flow, CEO, board of directors, right? Then look at how different Bitcoin and Ethereum and Solana and Ripple are. Do these things look like assets in the same asset class?
yeah.
Not really,
Or it's
right?
like if we thought about the Mag 7 sort of like dominance relative to, commercial real estate,
Right.
it just doesn't make any sense.
Right, and I think we're headed towards that world where Bitcoin, especially now that you have these regulated wrappers like the various ETFs in the US, and now all the regulation that's coming after the new legislation that seems likely to pass at some point soon. Um, you just Bitcoin just becomes this different asset that's kind of it seems like it's graduated out of crypto in a way. And
I
that's
think
so
that's a really good point.
thank you, Frank. But it might be the case that
Well,
we're
that's
kind
the
of
biggest issue is that crypto is viewed as like this monolith.
yeah, it is so different, right? One thing we see in like equities, we'll have developed, emerging, and frontier, right? And it almost seems as though Bitcoin and crypto is all in the frontier bucket, right? But it seems like Bitcoin is now graduated to the emerging, to being at least an emerging market asset, right? Given the kind of financial infrastructure that now exists and is growing around it, right? Like the 21 Capital thing we mentioned that came up earlier this week. Bitcoin seems like it's kind of graduating from frontier to emerging, or maybe even knocking on the door of developed. It's hard to say, but there does seem to be kind of a splitting up. And I think for the rest of crypto, which is really important, this legislation that would come in the U.S. will help that whole like that whole group of assets really have a chance of then graduating, right? Because the issues of legislation and regulation are really not a problem for Bitcoin today. They're really a problem for almost everything else, right? And we need that certainty to enable the asset class to make that move. And until that happens, you really have Bitcoin kind of as its own story, right? And it's an asset where its potential solves a current problem today that people really want sorted, right?
It's probably the biggest problem in markets.
I could argue that money's a problem too. I mean, you know, debt and the way money and inflation are a problem, but just the way money works is a problem,
Mhm.
right? And so whether it's, Solana or Ethereum or even Tron, right? Some of the key networks that upon which stablecoins are running, right? These are solving real world problems that are really an issue. The reality that we have to worry about Fed wires today in 2025 is
I have to go to the bank every time I send a wire for an investment. It's really annoying.
and it just doesn't match your expectations and your reality in so many other parts of your life today, right?
Although I get the free lollipops at the Chase, which is fun.
First Republic used to have chocolate chip cookies.
Really?
Yeah.
That's like what's the hotel with the chocolate chip cookies? The DoubleTree.
You got me
Yeah, they
there.
give out that's like their thing.
I'll have to put it on my list.
Yeah, I mean, it's okay hotel. Stayed at the one in Amsterdam a few times. So how does this all what are the sort of priorities and big swings that you guys can take internally to kind of capitalize on this momentum?
Yeah. So if the whole market is starting to say they want Bitcoin, right?
Mhm.
Which they are, the next thing they're going to say is, "What do I do
How
with
do I
this?"
get it?
No, no,
Or where do I yeah.
well, so they'll buy it, right? They'll buy an ETF because it's easy, right? You don't have to change almost anything to buy an ETF, right? And that's how, and I was wrong on this. I did not think that spot ETFs in the US just for Bitcoin would be so big last year. But in last year, they raised in total $120 billion,
Yeah.
right? So what does that tell you, right? That's telling you that there was a big demand that was still as of yet unmet, right? And there's a big demand specifically for this asset. And it's also saying that the infrastructure, like that's where people live today, right? The whole idea that we're going to tokenize everything and move to a tokenized world, it will happen. But how and when has continued to confound people, right? We were nowhere near all the reality that a lot of these people expected, right? So, anyways, back to the point. Bitcoin ETFs, they'll buy it, right? But then eventually this year, and probably even next year, they're going to say, "Okay, I have Bitcoin. Now, what do I do with it?" Right? So this is an emerging space that we're I think we're going to do some good things in, where we're working to deliver yield solutions with Bitcoin. It is a bit of a wild, wild west out there. People want an institutional approach, so we're working on that. And I think for investors, it's actually it is the thing that they're going to want, especially as Bitcoin volatility continues to decline. Right? If you look at stocks, you'll have a stock with a 4% dividend and the stock is a 15 vol, and you say, okay, well, there's a 4, and okay, so that 4 is actually meaningful on the 15, right? But if you look at Ethereum and say the nominal yield was, like, call it 3%, but the vol is 100, like, who cares? To some degree, people don't care, right? But when the volatility of crypto goes down, then they're going to start to care much more about what those assets can do for them, right? And this will happen just as Bitcoin becomes so ubiquitous, not in use, but at least in the minds of investors and people, right? So then the question is, how much does the Bitcoin economy really start to get going? How much do people start to use Bitcoin? And if they want to borrow Bitcoin, right? And that's where some of the yield can come from. So far, people are borrowing Bitcoin to speculate in it for the most part, right? Um, but as the volatility comes down, people are gonna wanna do more with yield, and so
How
we're
does it
focused.
improve as like a savings mechanism?
Yeah, yeah, exactly. It's hard for people to worry about that today, but it's already starting. We're starting to see some large Bitcoin holders that say, "Look, got $100 million worth of Bitcoin. I have a no basis, right? So if I sell anything, it's a massive capital gain. I'd love to find a way to just put my Bitcoin to work and generate, let's say, 4% or 5%." That's what they're asking for. So we're working on that. And I think, you know, we've realized that on the product side, to quote somebody I used to work with, like, your client writes your business plan, right? The client is saying, we're interested in Bitcoin. And the client is saying, we're also interested in what it can do for us. And there's not much to do as an asset manager when they just buy Bitcoin, go to an ETF, go to Coinbase, go to whomever. But when they want to do more, that's where skills of an asset
And that's the
manager.
guiding North Star right now.
Right now, that's a big piece of what we're doing. Yeah, there's definitely an opportunity around that. I think more broadly, the reality is that, crypto is still a innovative but inefficient space. So if you think about the marketplace, it's still siloed and inefficient. So there's still a lot of opportunities to make active returns in international markets based on leverage demands and that sort of thing. So we're focused there as well. We have people both in the US, Cayman, and Abu Dhabi, so we're a global business and capturing returns wherever they might be, or at least trying to.
And so you guys do a lot of work, a lot of content, a lot of writing, a lot of thought leadership. Where can people maybe learn more or connect with you?
Oh, sure. Our website is cbam.coinbase.com. It'll be live in a few days. We're just switching over. They can find me on Twitter or on LinkedIn if they use that. And we actually put out a almost every Monday.
Yeah.
We put out something called Crypto Mondays by Coinbase Asset Management. That is a tip of our hat to the Crypto Mondays meetups
Yeah.
We used to host a Crypto Mondays meetup in
In
Stanford
Stanford, yeah.
for, gosh, 2 or 3 years. And Lou, who was the founder of it, I think there's 70 Crypto Mondays all around the world, permissionless. Anyone can show up. And in the case of our Monday call, anyone can listen. So if you want to get on the list, you can send us an email at our website, or you can just follow me on LinkedIn or Twitter, and you'll get to see what Marcel, plug
Third.
number 3, and I have to say.
Oh, it's been nice to see you guys sort of retain a bit of like that specific culture that you brought to the firm, um, kind of maintain itself.
Well, the focus on content and writing
Always been
has
huge
always been a big focus. It all
for when it
started
was One River.
with One River and Eric Peters. He's been writing something called Weekend Notes since 2013. Almost every weekend. Well, every weekend sends an email, and almost every weekend he's writing. That's a very difficult thing to do. But the practice is something that we've also done inside of CBAM. But in terms of the form factor, we turned it into a video because it's a little bit easier for some folks to capture. So
Makes sense. Thanks so much for taking the time.
great to be here, Frank.
Pleasure.